Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys. Today we'll take a look at the euro currency. Here guys we have some important details that we see on the daily chart, on the high time frame analysis. And in general we have the positive view on the euro currency, and we think that market, the next destination point in the medium term perspective, stands approximately 117.35 area. And we think that within the months or a few months market should reach this level. Actually on the way up in the head, market has no significant resistance. So all the fib levels have been broken. Market right now stands above the yearly pivot resistance one, and market is not at ever one, as on the daily, as on the monthly, as on the weekly chart. So if you would like to take a look at the analysis of the high time frames, you could read our weekly research also guys. Today we have brought the valuable fundamental background that also suggests that market in medium term perspective should continue move up. At the same time, on the daily chart we have two important, or maybe more, but some important nuances. So first of all, take a look that market was not able immediately continue move up here. So actually it could become the V-shaped retracement, just a Fibonacci level. It's the 113.20 fib support. This market was able, for example, show this minor retracement and continue move up. But this hasn't happened. It means that on the intraday chart, we should be ready to compound it, some compounded retracement pattern. Some pattern that will have not less than 4 legs. So ABC retracement with 3 leg and some upward action. So retracement should be compounded. Second important moment here is that our task is relatively simple, because take a look. We have relatively close daily oversold. It's approximately at the 113 even area. And it means that all levels that stand below it, we are not interested with them too much. MACD predictor line is also stands very close here, and if market will form here the bullish grabber, this will be another advantage for us, because it will give us the more confidence with the possible upward continuation. Also in this area stands the broken yearly pivot resistance one, is 113.05 area, and take a look this previous resistance, or previous levels, previous substance in this area. In recent action guys, market shows very small retracements, so approximately 160, 180 pips to the downside. So when you calculate this retracement here, 114.14 to the downside 160 pips, this will be approximately 113.90, 113.80 area. So sorry, 112.80 approximately. So around 113. This will be approximately retracement if you use the harmonic swing here and count it down. So it will be approximately the same area. So it means that on the daily chart we could specify area that we should keep an eye on. It's the possible target of this retracement. So taking together all the factors that we have on the euro currency right now, I mean the fundamental analysis and technical analysis of the high time frames, we suggest that retracement should not be really significant. And this leads us to very clear patterns that now is forming on the 4-hour time frame chart. And this pattern calls out the cardless 222 sell. So personally I will be watching particular with this pattern, because take a look, this could complete the retracement that we would like to get. It will be completed, at least theoretically, right at the point that we have discussed. 113.05 stands very close to all support cluster, previous tops, daily oversold, fib level, yearly pivot support, yearly pivot resistance one. So also it will complete it approximately the harmonic depth of the retracement. Besides, what is also very attractive with this pattern, that it will have very close invalidation point, stands at 1290. So this is initial swing up, ABCD retracement inside of it. This is bullish continuation pattern, guys, is forming here, and this definitely is worth of our attention. The one thing that we do not want to see here is the miserable plunge downs, nasty black candles here to form. We would like to get gradual retracement, as the AB and CD legs will be approximately equal, so will be very harmonic with the same speed. So that will be perfect. But also here, guys, you should keep an eye on that alternative scenario. For example, if CD leg will stop somewhere around this point, it's 113.35 area approximately, this could mean that the triangle pattern is forming here, not the Gartner's Triple-2 buy, or this is also will be some kind of the Gartner's Triple-2, but not quite. So this, but it should be called as the possible pennant or triangle pattern. That's also is possible. So, for example, if you will draw the neckline, trend line from these lows to this, you'll see stands approximately at 113.35, and market will stop here, starts to move up again. It will mean the triangle is forming. So overall idea of the taking position will be the same, but this will be just different pattern. So guys, that's our view on the overcount. So we think that we should keep an eye and watch for chances to go long here. And one of the patterns that we could use is the Gartner's Triple-2 buy that we have on the 4-hour time frame chart. Currently it looks perfect, but let's keep an eye on how it will develop and what truly will happen with this. Also, guys, we suggest you to read our weekly research, because it contains a lot of interesting information and analysis, monthly chart, weekly chart, also good fundamental background. So you will get more information on your accounts, what to expect, and why we think that your accounts right now stands in the positive mood and an upward continuation. So let's see what we will get on the next trading week.